What's up, guys? My name is Drew Adams, and today we're going to be talking about how you are being kept from paying off your student loans. Let's get into it. So I want to start off by talking about a pretty alarming statistic. Today, more than 30% of student loan borrowers are in default, late, or have stopped making payments 6 years after graduation. And so as far as the history of student loans, let's jump into this a little bit so we kind of understand the situation that we're all in a little bit better. In the early 2000s, the Bush administration made it a lot easier for online education to grow, and that affected a lot of large for-profit institutions that expanded their enrollment by several orders of magnitude in the mid-2000s. From 2000 to 2010, enrollment for private for-profit institutions increased by 329%. Today, 44 million plus students collectively hold about $1.7 plus trillion in student debt. And this number is continuing to grow second by second. And on top of that, the student loan servicers, or the companies that hold our student loans after we graduate, are doing tactics and things that keep us from paying off our loans. And so let's jump into the top 3 things that they're doing to stop us from paying off the loans so that you can know how to combat it and how to fight against it and pay off your loans in a way that it will end up being much faster and much more effective than what you're currently doing. I'm going to save the important one for last, as I feel like it needs the most attention. I'm going to talk a lot more about it when it comes to paying off your loans. And so the number 3 thing that you need to keep an eye out for once you enter the repayment plan is they will attempt to have you consolidate all of your different student loans into one. This is the worst thing you can do, and let's jump into a little calculator to show you why it'll slow down your repayment options and extend out the time and length that you have the student loan. And so let's just imagine for a minute that these are your student loans once you come out of graduation. You have 3 student loans. In the next column, it shows the balances of each. The next one under the rate, it shows the interest rate that you have on each loan. And next to that is the monthly payment that you have. And below all of that, under total, it says that your monthly payment is $135 a month, owing a total of $12,600 a month. I actually should have used numbers that were more accurate when it comes to our student loans, because the average student loan amount is $32,000 once we come out of college. Now, this number is totally shocking, especially considering that a lot of the loans that people are getting are only for associate's degrees and sometimes more, but on average, it's $32,000, which is going to take so long to pay off, especially if it is difficult to find a job that pays well and things like that once you graduate college. Taking a deeper look into how long it'll take you to pay off, as you see here, you have your 3 student loans, the balance on each, the interest, how many years it takes you to pay off each one, and the month that you'll pay it off. And so if you take a look at this, the longest one will take almost 10 years for you to finally pay off all of your student loans. And so what they'll do is they'll attempt to consolidate these 3 loans, giving you a lower monthly payment and try to entice you by giving you a lower interest rate. And so let's make a couple of adjustments to this so you can see how long it'll take you to pay it off if you consolidate. Okay, so this screen shows that you have your 1 student loan. It's all consolidated into the total balance of $12,600 at an interest rate of 3.75%, lowering your monthly bill to $120 a month. If you take a look at the column where it says years to pay off, it's 10 years and 8 months, paying it off in September of 2031. And so it'll actually slow down the process of you paying off your student loans if you consolidate your loans. This is not the right thing to do if you're looking to pay them off sooner. And on top of that, what it'll do is it'll also be more risky for you to pay off your loans in this way. And let me tell you why. There's generally 2 really good ways of paying off your debt. And one of them is paying off the lowest amount owed first. And the second one is paying off the highest interest rate first. Both of those are more effective than just paying the minimum all the way through. I'm going to leave a link down below so that you can use this calculator and do the calculations, figure out which way you'd like to pay off your debt or which way is going to be optimal for you. Let's just say you paid off the lowest balance student loan off first, which would be the student loan number 2 here. So let's say it takes you 2 years to pay that off. And all of a sudden, once you pay that off, you no longer owe that $30 a month, effectively turning your $135 payment into a $105 payment. This is the safer way to go, because if anything were to come up in your life and you need the extra money, this is going to be there for you. It'll lower your monthly payments more than had you consolidated your student loans. Now, the number 2 thing that is keeping you from paying off your student loans is forbearance. Now, you may be thinking that you're getting a free ride right now because you don't have to pay your student bills right now. But here's the interesting thing about right now: if you were to keep making your payments, regardless of whether you have to or not, if you were to make a payment right now towards your student loans, 100% of your payment would go towards principal and 0% would go towards interest. Let's take a look at this graph again. Back to my example with this chart as far as paying off your student loans. If you see on the very far right of the screen, it shows interest only. About $50 of the $135 payment each month goes towards interest only. Now imagine if you didn't have to pay that interest on your student loans and you put a 100% of it towards the balance and the principal of your loans. This is going to be way more effective for you to pay off your student loans significantly faster by making payments right now. If you wait till the forbearance period is over, you can kiss goodbye that $50 a month that would have gone towards principal had you made the payments now. Now, for the very last point that I'm here to make is what they're doing is they actually don't allow you to make extra payments towards your student loans. What they do is if you make an extra payment, they put it in a bucket. All that extra money that you put goes into the bucket, and the next month comes along and they pull from that bucket and they put it towards the student loan. The extra payments that you make do not go towards principal unless you sign a form and request that you can make extra payments towards the principal of your loan. Now, this is different from any other loan that you'll ever have in your whole life. You have a mortgage, you get a car, you get credit cards. Any payment that you make after the monthly payment goes straight towards principal. This is not the case with student loans. I've talked to friends who are doctors and friends who are teachers and people who went into business or computer programming. Every single one of the people that I talked to had something similar. Now, this isn't something that's often talked about, that you have to sign a form to make payments towards your principal for your student loans. It just is so shocking and so dishonest and so sneaky for them to put this type of workaround so that you can keep paying principal and paying them money instead of paying money towards the principal of your student loans. It's just totally dishonest. What you need to do is call your student loan servicer and request the form so that you can sign, so that all of your extra payments that you make towards your student loans go straight towards principal. And you're going to have to do this for every single loan that you have. So if you have 3 loans, you have to sign 3 forms. I made the mistake of catching this because I was making extra payments and I didn't see it going towards principal on my statements. And so I reached out and said, hey, what's going on? Why aren't there extra payments going towards the principal of my loans? And they told me that I have to sign that form. And so I signed the form, and lo and behold, a month later, it was only going towards principal on my one student loan. And so rolled my eyes, called back and said, I want the form for each one of my loans. And so it was kind of ridiculous that I had to jump through all those hoops, and it was very sneaky and very dishonest of them. But now that you know what you need to do, go and make these changes right now. Make the call, get online on the website, and I think you can find the forms for the different companies that are the student loan servicers. And so you should be able to do it online or via phone. Do whichever is easier for you, but do your research, get it done, and make it happen so that if you do ever make any extra payments, that all of it goes towards the principal and not just towards the bucket, so that it could pay your monthly payment later on. And just a quick recap, be sure to not consolidate your loans. Be sure to make payments now, even though we're in forbearance, and be sure to fill out those forms so that all of your extra payments that you make go straight towards principal instead of towards the bucket. And if you found any of this useful or helpful, do me a huge favor and hit that subscribe button. Currently at 172 subscribers, aiming for 1,000 so I can start getting paid for this content. And if you found any of this useful, hit the like button. It'll help share and spread this information to other people who are watching YouTube that will find this useful as well. Thank you so much for watching, and until next time.